Welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at MarketSite is Greg Ferrari. He's the head of business and product development of U.S. options over at Nasdaq, and Sean Feeney. He's the managing director of U.S. option sales over at Nasdaq as well. And we're looking at the NQX. It's the Nasdaq-100 options for the masses. Thank you very much for joining me over at MarketSite. And Sean, we're going to kick it off with you. Tell us about some of the customer feedback that you're getting from trading Nasdaq-100 options.
Sure. Hey, thanks, Jill, for having us.
Of course.
You know, NDX is exposure to the Nasdaq-100, and it is a tradable product, for that specific purpose. The feedback that I've gotten so far is incredibly positive. If there's any criticism in that product set itself, is that the notional value of NDX, which is our flagship index product at Nasdaq, the Nasdaq-100, is incredibly high. It's approaching 7,000. Right now, and it's affording a customer the opportunity to have a lower notional value product, I think would be a very useful tool.
So Greg, tell us about NQX, why Nasdaq launched the product, and what's the goal with it?
Sure. So we have really two goals that we're thinking through. One, in what Sean described in talking to our clients, there are some challenges with what you see is what you get from a liquidity standpoint. Customers really depend on the on-screen liquidity to make investment decisions. So you want to be able to get in and out based on having that tight bid-ask spread on the screens. And with the the index value where it is, and the challenges associated with market makers being able to quote a couple 100 strikes up and down the chain on a very volatile index, naturally those products widen out to some. So with a reduced value index, our immediate goal is to bring on-screen liquidity for investors, retail and institutional investors. And then separately, we want to manage risk associated for the end user so that, on a $1,400 index, which is what we're looking to establish on a 1/5 deliverable at the 7,000 level that Sean referenced, a 1% move in that index is a significant difference in terms of, dollar points of around the $1,400 level. So we feel it's a much more controlled product for the end user. And then we also feel that the market makers can provide a better market, continuously, so everyone can come in and out in a seamless way.
So Sean, how do you expect retail investors and RIAs to use the NQX product?
Sure. And to kind of piggyback a little bit on what Greg was saying, as far as that, that notional valued product in a more reasonable range, at the 1,400 level, and again, with the tightness of the liquidity that you'd be able to see on screen, the retail investor would be able to have a little bit more of a we'll say a good advertisement as to what they're going to receive, from the liquidity providing community. So if a retail customer were to go onto their application and see, a market that's say $1.50 wide as opposed to $5 wide, it's definitely a more positive experience. And from the investment advisor community, being able to use cash settled products is incredibly useful. Both from a tax advantage perspective, as well as a ability to split trades among multiple accounts.
All right, and Greg, would institutional investors use this product the same way?
No doubt. So the benefits that Sean described for retail apply to institutions as well. So that tax treatment of a 1256, which was enacted by the IRS in order to give the 60% of your longs, 60% of your position the long treatment, even though if you've sold within 12 months, and that's a huge benefit to institutions as well as retail investors. We feel that banks are going to be able to provide a better market for institutions. Given that we see the volume in QQQ has exploded, we're looking at Q1 over Q1. Obviously, it's a different volatile profile right now in May, but that volume was up 158% year over year. So there's definitely this notion or degree of confidence in the Qs, and NDX has benefits that the Qs doesn't offer. And we think this is a great complementary product and provides that sweet spot of liquidity and the benefits associated with cash settled index options. And naturally, we see the futures as a great layoff hedge for the market makers, and that product is continuing to grow in a vibrant way, and we see this as a natural relationship between these two products to coexist.
So NQX will also be beneficial for market makers as well?
Most definitely. Mm-hmm. I mean, the market making community as a whole, providing liquidity in a fiduciary capacity to to the customer base and the institutional base, they're starved for this product because, as far as a retail-facing product, again, the notional value of NDX being incredibly high, smaller amounts of contracts to trade specifically. The liquidity providing community has been behind this product from day one, saying that they'll be there for this product once we begin marketing it and bring it to market. And we're very proud to announce that we're going to be bringing this product to market on June 26th of this year for the monthly serial expirations, and then further providing weeklies into July. July 19th, I believe, we're going to be launching the weekly product for NQX.
All right, and Greg, let's wrap it up with you with some inside product baseball at Nasdaq. Tell us about the future of NQX and index options in general at Nasdaq.
We see just a gap in our portfolio. We have the 6 options exchanges. Each of them are, covering, the gamut of the multi-list segment. And when we think about our portfolio of product and where we're missing, we see there's a variety of opportunity in the index option space, whether that's very bespoke in the sector in the sector space, or more broad-based that can complement our franchise. We have over 40,000 indexes within our index family from our global information services business. There are a number of relationships that we have both in the structured products and just the key buy-side relationships that use these indexes in a variety of fashions. And what we can do a better job of is partnering from a derivative franchise perspective of how those products are created and utilized in a derivative fashion.
All right, and we're here to help you guys tell the story. Thank you very much for joining us at MarketSite, and thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks, Jill.
Thank you.